Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And a lot of good stuff in the middle. And we have a great interview in this show with Manesh Patel. Manesh is an expert in Ichimoku Cloud, and he's got some interesting things to say about using that study and about the market. So you don't want to miss that coming up. This has been a week again of wild swings. Oil still the dominant influence in the markets. We saw a new low in oil, at least for over a decade, and then a strong rebound come at the end of the week. The dollar tried to get a rally in some haven bid, but then it started to fail as it got up back near 100, and we're looking for some lower prices in the dollar pretty soon. And we saw gold firm a little bit, and silver also starting to get some bids in it. We're liking silver. We're going to talk about that in the next week or two also. Stocks, well, they finally got the bounce in here, and I got to tell you, I am suspicious, and I'll show this in the short-term view of the coming week as we get up near our sell zone in the market in this bounce. And I have a feeling it's not going to last long. Let's take a look at our 60-minute chart of the ES, that's the S&P 500 E-mini, and take a look at what happened during this week and what the influences were and what moved the markets. Of course, on Monday, we were closed for Martin Luther King Day, but still the world markets were open, and oil remained under pressure. The fear was that Iran would be coming out with about 500 million barrels a day, but you gotta wonder if it was baked in the cake. I've been saying that. Futures, they had some pretty wide swings and ended small down. Talk about wide swings. We really had them this week, and I'm going to talk about some of that now. Eurozone on Tuesday and China were up strong, and you can see this big move here overnight as the S&P's got the plus 37 overnight, but then failed early in the morning and continued down, got as low as minus 14. 50 plus point swing in the E-minis there as they get a late rally. You could see that there on Tuesday. Oil was up early, and that was on a supposed increase in China demand, and the futures, well, they had that big swing, but then oil reversed back, and that hurt stocks, and as oil fell back, that's what gave us that big decline. On Wednesday, oil drops to a new low overnight. World markets resume their drop. Eurozone down 2.5%. Japan cracks 3.7%. U.S. futures down 43 overnight, dropped to minus 52 in early trading, and continue down here to minus 69 in the middle of the day. It was a pure debacle going on. CPI comes out down a tenth. It was, and core up a tenth. That was weaker than expected on energy. IBM misses on revenues, weak forecast. That's a stock we have been very negative on. IBM hurts the Dow when it gets down over here. We're down 560 on the Dow and have this giant rebound. Look at that. E-minis get all the way back up to almost unchanged. And that was a big reversal, but then they sell off right at the end there. You could see that tail, and that sets up some buying coming in overnight. Futures again swing widely on Thursday. Focus is on the yuan, which continues to sink. Italian banks, they got a crisis going on as they are down 24% for the year. Russian ruble starts to get slammed again also. It's below the 2014 crisis level. Everybody's talking about that stuff. Draghi, well, he's talking about holding rates, and they actually did hold rates as the ECB meets. Eurozone up 1.7%, but China down 3.2%. Oil is strong on a rebound, up 5%, and that lifts stocks that chop higher. Look at this, up 25 overnight. It falls to minus 15 points. That's the E-minis. Back to up 24 in the morning, pre-opening, and back down to minus 13. And then when the market opens, it rallies back up to 31 and then falls to unchanged. Talk about trading opportunities. Holy cow, moving around like crazy on Thursday. And that continues to set up buying coming in, though. As you could see, we have all of those rallies. Comes Friday, We get oil continuing to rally. Now, oil's up 7% at the best levels on the day as that big bounce comes in. And that stronger oil helps these markets overnight as bids certainly start to come in stocks as oil moves up. Draghi's in Davos, and he says that he's got more tools for stimulus. China wants to see a lower yuan. That doesn't really scare anything today. China's up 1.2%. Eurozone gains 2 to 3%. Japan on a massive surge up 5.9%. Home sales come out stronger. ES up 30% overnight and up about 37 at the best levels during the day. Dow was up 220 early, but then slips as American Express, they're down 13% on the day, and that really weighed on the Dow. But energy stocks, strong performers on oil as we get this big bounce in the market. So we've seen massive chop going on this week in these markets, and that is likely to be the story as we move forward. Let's take a look at our economic calendar for the coming week. Earnings reports, well, coming out like crazy. Earnings have not been great so far, and this is what the issue is that, well, revenues fell for just quarter over quarter, and now all of a sudden, on top of weak energy in oil, and the oil companies really struggling, even bank stocks are starting to struggle, the financials, as far as earnings go. And this is part of the cycle where earnings may not be all that good, and that's going to continue to weigh on stocks. Let's take a look here at this economic calendar, and you will see here earnings and economic calendar. The top column in there for the new viewers out there is the earnings that are coming out pre-opening. That's this whole list on top. Then these are all after the close right here, and below there are the economic events. So you might want to take a little picture of this and hang this up by your computer, because you have got lots of stuff coming out this week. I'm not even going to repeat all of these earnings. You can just read them for yourself. They're just going to be coming out all week, and certainly will be market movers. But talk about market mover, the big event for the week is the FOM meeting and announcement that comes out on Wednesday, as it's a 2-day meeting, as seemingly all of them are right now. And everybody, of course, will be wondering what the Fed's going to do. They are going to have a hard time raising rates again with what's going on in the world right now. So that is going to be the big market moving event on Wednesday. And then, of course, lots of other big things coming out all during the week. So Friday, some pretty good news reports coming out as you get the employment cost index and the Chicago PMI and consumer sentiment, all pretty important numbers there. So that is a look at the economic calendar for the coming week. That's it for the opening segment. We'll be right back with the best of the week and the worst of the week. All right, for the best of the week, well, we've had some decent movers this week with all of these swings. Some stocks got bid up, either it be on earnings reports or some rumors. First one we're going to talk about is Cree, C-R-E-E. That's the maker of LED lights. And take a look here at this pattern in Cree on the charts. For those of you that are new to our charting style, what we do is cyclical analysis. We look for market cycles, rhythms in the markets, and the way we designate them on our charts. We have these cycle brackets on the bottom, and they point to important low periods on the stock. And you can see that they point to how stocks roll over and how they trade. really interesting way of looking at the markets. And we also enhance that by having these what we call timing spikes right here that point at the low areas. Two blue ones mean an important low due right over there. And then we have our support and resistance zones and other annotations on our charts. So you're interested in our charts, go to askSlim.com and become a level 4 member. All right, so here we have CRE, and you can see what we were looking for back over here about 8 weeks ago was a bottom and then a rally. And that rally came, and then the news comes out this week, earning 16%. Their earnings are really strong, and there's the resistance zone right there. So we're actually not looking for a big move on the upside from here, maybe struggle in there, and then we'll see if it can get some legs. Note the inverted head and shoulders that's forming right in here, and so we could see it kind of playing around for a while and then eventually getting through there and moving on the upside. So not a bad bottoming pattern in there, and it might need a little more work to build a base, but overall not bad. When we look here at the daily chart, we're going to look at a couple daily charts in here. You could see, well, these are all the annotations that we put in there, and what we had was this breakaway gap right over here as it breaks down out of that trend line. Lots of great candlesticks in here, a bullish hammer. Top over here made with an engulfing pattern and an evening star. So great stuff as far as how these candlesticks work. And now this breakaway gap, and this being that left side, the right side of that head and shoulders forming in here. So we think you got to buy CRE in any kind of a dip in there. So look for some resistance here, chop around. But overall, this pattern is not bad, up 16% on the week in CRE. Let's switch this over to Xilinx. XLNX, we're staying in the technology area right now, and you can see this is how I always have my charts: weekly on the left, daily on the right. We'll look at both of those right now, and you can see here's a beautiful look at how our cycle patterns work, and you can see these rally and sell-offs. Look at those cycles, and they're absolutely gorgeous. Bullish piercing pattern makes that bottom rally, and another solid base being built, and this big morning star on this big gain of 13% on the week in Xilinx. This is a great pattern. We're going to look for much higher prices, and we want to buy it when it comes down and makes a dip. So great pattern. Look here on the daily chart as you see this big island that formed. Also this Harami and Morning Star and engulfing pattern actually also in there. Great signs that there was some upside move coming, and Xilinx gets a really nice move. Another one more we'll look at here in the technology category, and that is ADTRAN. ADTRAN is in the information technology category, and you can see in here we were actually looking for a correction and a low right here. You see that? And then another rally. Well, that's perfect as it explodes on the upside, gets a breakout above this level right over here, and this is an absolutely great pattern in ADTRAN. So really good ones in there. Take a look at DDS, Dillard's Department Store, and this is up 9% on the week. And here we go. You could see we'll see these two blue marks right there. What means we were looking for a low to form right in this area right here. It's forming it a couple of weeks early. There's some anxiety to buy in there. Perfect morning star formed right there, and we think it's a nice bottom and a nice buy. Our buy area is at around, we'll call it 65, give or take a point in there where you get a little bit of a pullback. So Dillard's looking like it is making a nice bottom in there. So there's some good stocks that are bottoming in the market, or some solid patterns in there. Wynn Resorts gained 12% on the week. This is not a great pattern, and we don't expect it to be able to make any significant upside. And airlines finally getting a bounce. Some pretty big bounces there in the airline stocks. As a matter of fact, looking at this, Spirit, SAV, up about 17% on the week. We're going to look for some pullback in there. That was a big gain. We have a buy area around 41 in Spirit. Copa, CPA, Copa Holdings was up 10%. Alaska Air up about 8%. Take a look on the daily chart in there, and you'll see a beautiful morning star that is forming. And JetBlue up about 6%, and we think that one's going to about 23. Virgin America, that's one we love that company. That one was up 5%. 5% on the week. It's at some resistance right now. So we're going to look for a little bit of a pullback in there before it can make a lot of ground. And United Airlines, sadly, was only up 2.5%. It struggled a lot early in the week. And that, to us, is a stock bottoming. Also, we want to buy some dips in that one. Liking that one a lot. So that is United Airlines. Showing some life here, and you'd think with these lower oil prices they'd show a lot of life. So we'll have to see how these earnings start to come out in the airline stock. So oil's got some bounces, but not all that much compared to the lift that we saw in the oil price. And we think that the major oils, the major international oils, and even some of the drilling stocks are in better shape. And for our members, they're going to see a lot of that stuff as we move forward and do the member videos on that group. So that's it for the best of the week. We'll be right back and show you what was the worst. Worst of the week. Well, one of the worst of the week in the market, and certainly in our 330 stock universe, was Solar City. This is a stock that we have loved to hate, and had a big rally back a few weeks ago. We didn't trust it at all. In fact, this was not only the worst of our list, down 20% on the week, but it's the worst week ever for Solar City. With that kind of a decline, Nevada comes out with a ruling that affects them pretty significantly, making solar more expensive, and this stock takes a very big hit on that news. Let's take a look here at the chart of Solar City. You can see again our cycle patterns in here called for a decline all the way out here and towards the end of March or April. Had this big rally here with the rest of the solar stocks on its on extension of tax credits, and that helped the whole group. Speaking of the group, all of our groups are listed on our charts right over here, you can see. So those are the 5 stocks that we look at in solar. Look at Solar City. I mean, nothing is as bad as this. Our estimated loss, $8 for 2015. 2016, $8.90 expected the loss. How could this stock get that kind of rally? There are so much better stocks to buy in the solar category than this, and this stock gets absolutely wasted on this big decline that you can see right here. So bad pattern in Solar City, and I would say the stock, any rallies in here is really setting up for a sale. Next one we're going to look at Borg Warner BWA, down 14% on the week. This is one that, no news in there, and we've had it as negative. Man, has it ever been negative? Now you could see our cycle projection in here was calling for a low right in this time period and then a bottom forming. We think this is a capitulation going on there. Let's just take a look at the daily chart, which I didn't plan to do, but you could see right in here this really good information where you see the 89-day moving average, a significant resistance. There was a big failure right there in that engulfing pattern at the 89-day. Just above the 89-day right over here, we get a negative momentum signal here, and the stock collapses. Note 3 days ago that doji or little hammer pattern. I think there's a bottoming getting ready in here. So Borg Warner, I mean, if you are a brave one, this one I think is buyable. And by the way, Borg Warner down 14% on the week. American Express down 12% on the week. Stay on the daily chart here and you'll see, look what happened today as the stock gets absolutely hammered. Still down over 7% on the day. As we look at it, massive volume coming in here. You got to wonder if that's some capitulation. Note that we had a negative momentum signal right over here, and that remained through all of that pattern right there. Take a look at the daily chart. You could see it's been in this red negative zone right over here, coming down towards a small, we call this intermediate cycle bottom, due right over here. So this capitulation in American Express is likely to get you a bounce, but overall we don't expect the ultimate low to come out until April. So look for a bounce on American Express, but down over 7% on Friday and down 12% on the week. Take a look at some other bad stocks in here. We'll take a look at STX. This is Seagate. This stock trades a lot like Western Digital. Also, this is in the storage hard drive category. Barclays has downgraded the stock this week. You could see we've had it in a negative pattern. Although due in a couple of weeks, we expect it to make a bottom in there. Western Digital similarly, but you could see it's been negative. We've expected the decline. A beautiful looking bearish flag right over here that once it broke down, it just absolutely collapsed. So it's been a negative pattern, and now it's getting near the end period of that decline in there. Other stocks that have been really negative on the day, on the week, Express Scripts. This one gets a big hit. This one, Express Scripts, is in a hospital benefit manager, and it deals with the HMO hospitals. And we've had some news coming out that there is attempts to renegotiate contracts with them. Of course, HMOs, hospitals, all under huge political pressure here, and you've got Bernie Sanders just wanting to just essentially get rid of them completely and just have just national health care. So you know that the political winds are negative for this group, and they're laying all over Express Scripts on their pricing. So that's why it gets a big 10% decline on top of last week's big decline. GG Gold Corp, that one down 10% on the week. We see a bottoming in there, and we're liking gold and silver in here, so we think that one could do better. JC Penney down 10% on the week, another stock we love to hate, as this one we believe is going from its present price of $6.65, which we were bearish at 14, all the way down to $2, sub $2. That's where I see JC Penney and the potential bankruptcy out there. But that's just me. Bank of America down 10%, Citigroup down 9%, as the earnings apparently okay, but a lot of talk about energy exposure, and that maybe there's as much overall exposure in derivatives than or more than we've had even in 2008. Union Pacific down about 5% as they oppose rail mergers, and that pattern in there is very negative. So that's it for what we have for the worst of the week. But stay close, because we have a great interview coming with Manesh Patel coming right up. And this is Market Pros. This is a segment that we do now and then when we get some special people on the show. Today we have Manesh Patel. You know, for me, Ikemuku has been a mystery, and I really wanted to get somebody on the show that was an expert in it. I consider myself an expert in technical analysis, and especially cycle analysis, but I have watched a lot of the work that Manesh has done, and it has been very informative to me. Manesh is a CMT, veteran institutional trader, founder of Ikemuku Trade, an educator, and works with industry professionals and students. So really has gone a lot of way in helping a lot of people understand this, and authored a book, Trading with Ikemuku Cloud. Manesh, welcome to the show.
Thank you. It's glad to be here. Thank you. Okay,
glad to have you. Now, what we have is some video here. We don't have Manesh's picture, but we're going to spend some time on the charts here and really talk about it. Manesh, I've got your chart showing right now, and I want to try to clear up this mystery about Ikemuku. When we look at these things and we see clouds and lines and all kinds of things, and I know this is one of the really three main studies that traders in Japan use. Talk to us a little bit about it. Clear up the mystery on this.
Yeah, so Ichimoku in Japanese means at one glance. So the whole idea of Ichimoku is to simplify trading. What I've done here is I've shown you a simple chart where you see this cloud and then this green line. This cloud basically represents the sentiment where it shows you supply and demand. So the way you read it is that if the current price is above the cloud, then the sentiment's bullish. That means you can only trade on a bullish way. If price is below the cloud, that means sentiment is bearish. You can only trade downwards. If price is in the cloud, that means basically it's consolidating. At that point, you need to wait for the sentiment to change either to be bullish or bearish. And that's the simple notation of
Wow, that is simple.
Price. All right. And the way you trade it is that you look for price to be in the cloud where it's neutral. The moment it pops outside the cloud, either above it or below it, and the sentiment changes, that's when you start looking for opportunities. And what happens here is in this example here, and you can see back in 2011, we popped out of the cloud here, which was January 2012. We popped out of the cloud and we remained above the cloud until August of 2015 when the whole China stuff happened.
So
And
we're
at that
looking at a
point,
daily chart there of the S&P 500, correct?
this is actually the weekly chart for the E-mini S&P
Oh,
500.
weekly E-mini S&P, okay.
Yep. So what happened in this scenario here is in August here, 2015, we finally closed below the cloud here where the sentiment changed from being bullish to finally being bearish. So at that point, it went bearish, and then we went back above the cloud here. So this is what we call a bleep. And the reason why that bleep was because price did not sit there and tank from this point right here due to the monthly support. There was a monthly support here. And if you like, I could quickly show you that here. And this is where it's easy to do multiple time frame analysis here. So this is a monthly time frame for the E-mini. And back in August of last year, when the China stuff started happening, we went below the cloud on the weekly, but this green line here, which represents a 26 bar support, in this case it's 26 month support, and we never closed below there at all. So you could see here, since we never closed above it, that's what caused price to come back above the weekly time frame cloud.
And
if
now
you
something
notice-
has changed.
Yeah, something's drastically changed, and you guys could see it from our outlook that we started talking about in December. What happened is that this action here in August was so drastic to a point it changed the forecast for 2016 for us, where basically we talked about where it was going to be in a bearish consolidation pattern. And now what happens is if we close at the end of this month, which it looks like right now, below this green line here, then the probabilities of us entering a bearish trend sometime in 2016 is going to be high.
Now this is interesting because when I look at that chart, I think about the things that I talk about, and one of the things that I really focus on a lot is momentum. I think momentum is ultimately the most important for longer-term traders or even short-term traders. So when I look at that, it looks to me like there's a reflection of momentum or loss of momentum when I see those charts. So would you say that that's similar?
It's a loss of momentum, but if you look at it from the monthly point of view, this is a loss of momentum temporarily. So even though we're moving down drastically in a huge percentage, this is still going to be a major pullback for the monthly time frame for this big entire trend going up. But this major pullback can represent 20 to 40 or 50% of a downward turn. But over a long-term period, which is a 5-year projection, this is still a major pullback, believe it or not. And until the monthly gets below the cloud, you can't really say the long-term projection is a bearish sentiment. So here,
when I look at that, is the cloud a draw? Is there any way to target your trades based on that?
Yep. So if we close below the green line, then what happens is we say it's a high probability of a major pullback that's going to occur. And what's going to happen is it's going to have a high probability to get to at least the top of the cloud at that point. So if we close below the green line, my statements to the outside world is going to be is that we now have a high probability of coming to this cloud, whether it be the top, middle, or the middle or bottom, it doesn't matter. But the first target is the top of the cloud.
And the price of that right now is?
If you look at it right now, you're looking about 1587. But remember, this changes month to month. And we could sit there and slowly go downwards, and maybe by November of this year, the cloud top would be around 1773.
I see. Well, that's really interesting. So the longer it takes, the higher the area of support.
Yep. And normally what will happen is you could see the same thing also in 2008, and we could show you that, is after you close below this major support, this green line support, we'll come back and test it. And so what will happen is we'll slowly come back and test this major resistance level, which is now here, at roughly about 1934, and then what will happen is we'll test it, and then we'll start making a move towards the cloud.
Well, it's amazing because so much of what you're looking at right now lines up with my work because I've been looking for a decline, first supports in the around the area of 1775, but my ultimate target is around 1600. So that's really fantastic. And I thought if they rebounded, they'd rebound up to only the low 1900s. So my work and your work are just in alignment, and that really blows me away.
Yeah, and we're looking for past patterns from 2008 to kind of repeat now. And I'll show you what I mean by that in just a moment. But if you look at it here, we closed here, and then if we retest this and then go down, and normally that happens in May or April. And let me quickly illustrate that for you. So if you look at the price action here, January of this year, we basically closed below the cloud here, right? And now we're starting to trend downwards. If you come back, and I'm just going to slowly scroll here so we can still see the view.
Mm-hmm. So you're going back to 2008?
Yep. So if you look here in 2008, we basically right here, we barely closed below the cloud in 2008. And notice one thing, we pivoted right here, which is around 1252, and then we pulled up to this green line, which is the same green line that we're looking for the markets to pull back to. It pulled back to here, and then what happens is somewhere around April, right before the sell in May and go away scenario, the market started trickling downwards, and that's where we had the downward move going forward. So if we repeat the events of 2008, then it will be similar to what happens now, is where we'll go back to that green line resistance, we'll hold it, and at that point, the journey will slowly start to come retest this low, and then to break that to eventually start a bearish trend.
So I want to be clear about one thing. These are patterns, and it doesn't necessarily mean that the magnitude of the decline is going to be the same. It may be less than the 50 or 54% decline, but still the pattern is the pattern, and it is suggestive of further declines.
Yep, that's correct. We give a forecast, and then what you have to do is you have to verify it with actions from the chart week by week. So our forecast is that we're going to sit there and sometime this end of this month or beginning of a week or in February, we should hit a bottom of the markets. At that point, we'll start to pull back up. We're thinking it's going to come to this resistance here at 1934 in the E-mini S&P 500 futures, and then slowly start going down after April or May to go downwards to start a bearish trend. That's our forecast at the beginning of the year, but we verify that with week-to-week price action movements on the charts by looking at the E-mini, the VIX, the bonds, treasuries, and other products too. So we support our actions and our forecast for weekly price actions.
So before we hang up on this whole conversation, there's so many people that are looking at China and specifically oil that's been driving this trade with markets coming apart with these deflationary forces. Just talk about those markets, and because they're probably the biggest influence, and how you think that lines up with the scenario.
So here's a weekly chart of the Chinese market, okay? And one thing I want to stress is in August, when people were talking about how the Chinese market is bearish, it really wasn't. So if you look here in July of 2014, the Chinese market basically broke out at 22.55 and started this big longward trend. Then basically last June, it wasn't August, it basically topped out and started moving down. And if you notice, the movement came all the way down, and this was right here, September 28, it hit the bottom of the cloud. It hit the bottom of the cloud, and the cloud basically stopped it from going bearish. Price then followed along the cloud going upwards, and the moment it closed below the cloud here, the sentiment for the Chinese market at that point changed permanently for us to be bearish. And what happened was it held a resistance here, right at this level here, which was a resistance right here, and it never seemed to sit there. Charting issues. Never seemed to sit there and could break this resistance level at all. And when it held it here and then slowly started making a move down, there was a high probability to retest that low. But the next level now for the Chinese market's this one. So we think now we got a high probability of the Chinese market eventually by the end of this year getting to 28.15. And at that point, it could possibly break that to come back to where it first broke and started this big upward movement here. But in actuality, if you guys look at it, it's not a bearish trend. It's just retracing the whole big movement that it went through from the very beginning.
Yeah, not a bearish trend, but tell that to the shareholders, huh?
Well, it depends on when people get in.
Yeah, right. Well, in the meantime,
So we've been
I'm
short
looking
the
at that.
Chinese market, and we've been short all the way to 29.90, and you could see that this week it basically got there. So we've taken profit on our ETF position for the Chinese market, and now we're just waiting for a pullback on lower time frames to go
Pull
up.
back upward.
Yep, pullback
Yeah,
upwards to happen,
right.
and then we'll look to enter another bearish position to start going to target the 28.15 level.
Okay. Anything on oil that you can share that you think is significant? Because that's a big influence.
So on crude oil, I'll show you, this is a weekly chart too. And I'm keeping it to weekly because we want to forecast for 6 months to 1 year at least. So on the weekly here, and we've been short crude oil as soon as it closed below the cloud here. So you could see an early signal here on the weekly time frame here, which was basically back in July 28, 2014, where the sentiment changed on the weekly time frame to be bearish. And you could see after that point it tanked. Then it came back up here and then so forth. But another position to go short, and the critical point right here for crude oil was at this point right here when it touched this green line, which is at $50.35 a barrel, and this was October 5th, 2015. It got to that resistance and they would not break it at all. In fact, if you looked in the lower time frames, this resistance here on the weekly matched the lower time frame, so we call this a multiple time frame resistance value. It held that, and pretty much at that point it started to go down. And since then, we've been targeting a level of $22.50 a barrel for basically our price target for this guy. And where did we get that from? If you look at the monthly time frame and you zoom out, you could see this price action here going back between 2000 and 2003, and you could see there's a flat support line right about here. So roughly right around here, 24.19, and then if you look at it here, there's another level here around 18. So roughly around this level, between these levels, we feel like it's going to bleep, but these are levels it's going to get to. So 24.19 at least.
I had a projection level at around 28.60, and now as we speak, it's gotten under there today as we're in total free fall, down 6% on the day. So.
Yeah, and it's kind of hard to see because you're actually looking back at this consolidation pattern between 2000 and 2003. So there's a lot of minor supports where it could bounce off them, but the key levels as far as Ichimoku is concerned, the flat parts of the cloud, which represents 52 bars of support, are these levels here.
Wow, those are key levels then. Thank you. All right, Manesh, fantastic stuff. So glad to have you on. I want to make sure we put that chart up that has your information on it. This is Manesh Patel, and it's ikukamukutrade.com, and you can see there on his chart his contact information. So great stuff, Manesh. Love to have you on again sometime in the future.
Well, thank you for the invitation. It's greatly appreciated, and more than welcome to come back.
Great. Thanks a lot. Best to you. Take care.
Thank you.
All right, this is our short-term view. Do this every single week. Take a look at 5 markets and then take an accountability of how I did in the week before. Short term, I think it's been tough to call recently. I think my longer term views have been outstanding. And we're just going to call this week 50% week, really. We got light crude, right? We thought it would have an up week. We thought it would test 32.30. Man, it's gotten close up there as it's had this big rally. Almost got that. Gold market, well, we thought it would be kind of a down up week, and it really turned out that it was more like an up week as gold was pretty firm most of the week long. Euro, we got close on that, and we thought it would be a week and a half sideways. We've really had that, though we thought it would finish a little bit up on the week and it's a little bit down on the week. So not that much of a big deal there. The bond market, well, we kind of got close on that one. Also, we thought it would come down, rally. Thought the low would be around 127.18. It actually did not get quite that low. And we thought it would be a small down week. And the stock market, well, we had a couple of scenarios out there, and we thought it was the weaker scenario, and it really has been. We thought that it would get up to 119.12, and it actually has gotten remarkably close to that in this rally in here. Not exactly the pattern we thought it would be, though we thought it would be very choppy, and that's pretty much what we got. So we're not going to give ourselves a lot of credit for this one, and we're going to do better in the coming week. Let's take a look here at this daily chart. Everything we look at is daily charts in this shorter term view of the market. So we're going to start out looking at light crude on the daily chart, just as we always do. So here is that chart in light crude. So what we have forming in here is a better cycle pattern than we've had. As we get to the end of the year, a lot of times it gets off. This 5 there number is just nothing that we've seen here. And then we've gotten back now into these 7-day rhythms that you can see right in here. And that was 3 7-day rhythms right in a row. These were 8s right there. So you can see how close the rhythms are when you look at this. And then this bigger one right over here is an important one also. So we thought we'd get up to 32.30, and then when we fell down further down here, then the resistance area got lowered by about 30 cents. So if we take a little closer look in here, you will see that we are coming up right now to the bottom of this resistance area. So this week we're going to look for a choppy week and a downward bias. We think the next 5 to 8 days is going to give us some kind of a test of these lows, and that it would then be a pretty major spot right there for those people that are our members. You could see our big picture on oil and you'll know what I'm talking about, or the recent piece I did in Tools for Techs on correlations, and we are expecting something important to happen here in these next few weeks. And the picture here for the short term is an attempted rally and then down again. We think that this area right over here, 33.35, that's probably the best case that we can get to, and possibly that we don't get that far, and that this area of the high that we made today, what was I looking for the week? 32.30. We got up to 32. 32 it looks like. So that was really spot on, wasn't it? So this new resistance zone in here I think is going to be important. We're going to look for it to chop around and then move to the downside again and get some sort of a test of the lows. Yeah, if that happens, we're going to see more struggle in the stock market, right, because of the correlations. Take a look here at the gold market /GC. Well, like I said, we thought it was going to chop around in here and give you a small downward bias on the week. What happened was that this low that we're expecting, you see these two nested brackets right in here, that low came early for us. It came a couple 3 days earlier than we expected. Then you got the breakout right here. That puts us in this rally phase right there a little bit earlier than we expected. So now, similar to what we said for the oil market, this is the resistance zone that we've expected it to get up into, and you've seen that happen. Now we're in this upward rhythm right in here, these two cycles, and that phase should continue to push up by a little bit. We're going to look for a test of the upper side of this range. We're going to call it 111.18. Downside of the range we're expecting this week is around, we'll call it 1087 on the downside. So I think that's where it's going to trade in between this week. I don't think it's ready for a big breakout, and I think that the big breakout could come right over here. So if the pattern we have is right, it would look like this, and then some stronger period right here. if we get through this 1118 number, you know we're already in the upward acceleration. So we're going to call this a sideways chop, 1118 high, 1087 on the low side, as we get into kind of a, see this picture right in here, that would kind of frame that right there, and that's kind of what we're expecting right in that period. So we're not going to look for the breakout yet, but we are going to look still for a stronger market. We like silver, and for those people that get our rankings and setups, you could see our notation in that one. So silver might outperform gold in here before you know it. Take a look at the euro currency /6E, and this one here, we said sideways for 1.5 weeks. Let's take a closer look in here, as this is the reason we thought that would happen. Now, it's a little bit maybe weaker than we thought, in that we thought this was kind of the area that it would hang out in for a week or two, and then get into this period and move sharply to the upside. So we are positive in it here, and I don't think it's going much lower than you see right now. We'll call it a day, a week where it essentially is up on the week. We expect it to curl under here and start to move up pretty soon. We expect the dollar to move inversely and move to the downside, and we think that this big flag that's going on here, let me just show you the flag that I have marked off here, is going to bring a breakout soon on the upside right there. So here's this upside move, that's the flag pole. These lines right in here you can see are the flag forming, and we think it's going to break out there pretty significantly on the upside. So short-term wise, we'll just look for a couple more days of fooling around in here, and then turning to the upside. So that is a look at the /6E. Let's take a look at the bond market. Now, what we thought in the bond market was that it was going to pull off and then be able to get another rally going, and it kind of did that, but it didn't make it as low as we thought it would make it. So this is where it sold off early in the week. It had the rally, got up into this sell zone, which was a little bit higher than we thought it would get, and then it pulled off. So this is not exactly the pattern that we expected last week. What we expect now, though, is that, you know, we're looking for, and I'm going to show you in a moment, that there's going to be more weakness in the stock market. See this right over here? That's this period right in here. So we're expecting another move here up into this red zone. We're going to look for a test of that 129 resistance and then roll over. This is the inverse of what I'm going to show you in the stock market, where I expect the stock market to go down and then make a bottom and rally. This, I think, is a rally and then come down and sell off. So we're going to look for the market in here to have a rally at some time during this week into this red zone, and this being a short side setup. That's the short side setup that we are waiting for, and hopefully that will come, and hopefully the stock market will help us get there. So that is a look at the first four markets. We'll talk about the stock market here. Last week we did anticipate that there were a couple of scenarios, and those scenarios where we would try to rally, but the rally couldn't hold, and we would continue to sell off, and that we continue to see wide chops in the market. We thought we would get up to 119.12 and then fail on a bounce, and now you'll see that, well, though the exact timing of that wasn't perfect, we have gotten up close now, similar to what we said in oil, because of the fact that it made a lower low. The upside resistances have been lowered, and you'll see that as we look at this chart. So we're looking at the S&P 500, and here is that daily chart. So we had anticipated that it would be choppy and that it would get a move up to the area of about 119.12. The high today was 119.08. So now this was a minor resistance in there. We didn't really think that would hold it. And then right over here we're at 119.14 or so. This area here we think is a big resistance. Now this pattern in here as it lines up, for those of you that follow our cyclical patterns, you realize that this low right over here is 20 days off of this low. There is a significance to that. It would be a very rare occurrence for that to be the important low. It's much more likely that this is the pattern, which is the worst of the two patterns that we talked about last week, is what's happened, and that this rally that we're having right now fails and pulls off for, we're going to call it 3 to 5 days on the downside, testing this low. We're going to look for 1820, 1830 again on the downside in here, and that's going to take oil reversing back to the downside. It's going to take something overseas that breaks the market again, or just the fact that there's still going to be a lot of selling in this market. So this big area right over here, this 119.14 up to 119.46, is our big short-term resistance and sell zone. So if it gets in there, we still think that it will reverse pretty sharply. Could do a little better than that 119.14 we're talking about, but we think that there is a lot of risk in here and that it's going to reverse back down to the downside. And I can show you something in the VIX. Now remember, the VIX moves inverse to the stock market, and the pattern in the VIX is suggestive that what I'm saying about the S&P 500 is correct. We'll take a close look in here, and you can see the way these patterns are working in the VIX. Look at these perfect cycle patterns right in here, right? Beautiful rallies and sell-off, rallies and sell-offs. There you go. This decline in the VIX corresponds with the rally in the stock market, right? Well, where are we coming now? To another rally in the VIX. That's suggestive of the fact that the stock market's going to test those lows, and we're likely to see VIX, the implied volatilities, get up to the 2830 number again in the next week or so. Remember, we said 3 to 5 days on the stock market, could be a little longer. We think there's going to be a pretty good rally here in the VIX again, and so that's how these correlations work, and that the VIX is helping us see that the odds are high that this rally that we're getting here at the end of the week for the stock market won't hold, and we're going to get another move to the downside and a test of those lows. Now, I believe when that comes, if this pattern shapes up properly, that's going to be an important low for a while. And for those of you that are our subscribers, you'll be getting that as we do some further analysis in our videos. For those of you that are not, now's the time to go sign up. Level 2s get all our videos. Level 3s get our rankings and setups and all of our videos, and can email me for some coaching light. And level 4s get all of our charts and our rankings and setups and all of our videos. It's an amazing value. So I don't know where you get all that for, just the small little fees that we charge for all of this massive work that we do in producing all these videos and all the analysis. So it's a lot of work. We have a team that works on the site. We have a team that works on all of this analysis that you see. So please support us and become a member at askSlim.com. That is it for the week, and I hope you found a lot of valuable information in here. Hope you enjoyed the interview with Manesh Patel, and there was valuable stuff in there for you, and we are hoping that this is a great week for you and yours, and we are always wishing you great trading.
Well, I'm going to